Okay guys, 30-day challenge. What is it? Should you do it? And what's it for? Well, we're going to discuss that right here. And I'm doing it for the squad because it was specifically asked. Let me kind of show you. So it's for Marina. Salute to you. She's trying to do this properly. The guys are doing very well. I'm very proud of them at the moment. If you look at the account builders. Sergio, so proud of your son. And it all stems from this, because the idea of the challenge, it's not to restrict you, it's actually for you as a rite of passage, and it will make you better. Now, if you stick to it, you're fine. If you break the rules and you deviate, you're already telling yourself that you're either overtrading, gambling, and you need to rethink whether you should be trading at all. Okay, that's what it's all about. Now, the rules are quite simple, as she put there, 30 days. So I'll tell you that, and then I'll come back and I'll show you how to track it, but then what to read within the tracking. Okay, so a 30-day challenge is a rite of passage. Okay, and there's many ways you can do it, because 30 days is a good sample of data that you can journal in a diary, like day 1, day 2, day 3. What you've done, why you've done it, how you feel, and whether you just did it on a whim or whether you planned it. You can just write that down in a diary. Now, you don't have to trade every day. So the idea is to see a chart grow from inception to finish. So the best way to do these is you start the first of the month and you run it for 30 days. What you'll see in those 30 days is a single asset, because that's one of the rules. It's only one asset. So cable, euro, dollar, whatever you choose, but just one. You will see that develop from day 1 to 30. So you'll see a Bollinger Band grow. You'll see how quickly the time frames move from extreme to extreme when you're looking at oscillators. You'll see what it does while it's flatlining, as well as the signs that send it off into a trend. Because without looking at volumes and all of this, because that's all just bollocks, right? You'll start seeing the candles change their behavior. But what you'll also see is how a 5-minute is essentially noise, and that the daily is developing what the trade is. And this is what happens over the 30 days. So the rules are quite simple. One asset, 30 days, one trade a day, just one, with one position, smallest size possible. Now, why is that? Well, the one asset means you're training your eyes to the same thing over and over. If you're looking at multiple assets, you'll forget what's going on. So it trains you into the single point. One position means you've got one shot, one golden shot. So that makes you be patient. And the smaller size takes the money out of the equation. So you're literally looking at a process. So that's the idea behind it. Now, at the end of the month, if you've done 30 trades with one position and you're positive, you pass. If you took 31 trades in 30 days, that means you opened up an extra position. Tendencies of overtrading, you fail. If you ended in a negative expectation, in other words, you lost, you've technically failed. But as long as you did it with 30 trades and you documented it, you might be able to see why you went wrong. So you might have failed from a money point of view, but it's a pass if you sort of understand, yeah, I let that run a little bit too much and it wiped out whatever. Okay? These sort of things. And that's the idea behind it. Now, to just keep it in your head for 30 days is quite difficult. You need to be able to review what you've done at the end of the month. So if we come back, what we can do is One of the better sheets to use is something like this. So let's just say you've got £100 to start with. Okay. That'll give you 10p a position. I work on 10p per 100. So if you were looking at a basic trade of 10 pips for each trade, you'd make £1. But 10 pips on certain assets can be a stretch. So have little rules. I have rules. There's one here. 4 pips and below, don't trade. So the minimum trade that I'll be looking for would be 5 pips. So you can set a 5 pip target. So you're looking for 50p. Okay. So it'll be 50p each of the days. Okay. So, and then if you just go, well, if my target is 50p and I times it by 30, well, you're looking for about 15 quid. Okay. So at the end of the month, you'll be looking for 15 quid. Okay. Days to the goal would be 30. So it now tells you it's 50p a day as a guide. And that's in place. So you can see what's going on. And then each day you can target what you think you're looking for. Now, if you're doing it through growth, you might want to increase that each day. Personally, I would just say, well, my daily target every day is 50p. Okay, so that's kind of set. You've laid out what's going on. Now, on these sheets, I'll show you where you find them. If you come down into the brokers tool, you'll find them in there. Okay, so they're easy to find. Now, the next bit is you need to understand what your drawdown is. If you're working on a prop and you're doing that as your 30-day challenge, there's nothing wrong with that. Personally, I would do it with a live account like BlackBull. Put the drawdown in. If it's your live account, it's 100% of account. You can have all of it. If you're doing a prop, it might only be 5%. And then that'll adjust things round for you because it changes the position size because the sheet works it out on the drawdown. So if you've got a live account, you can use all of it. That's what you do. Okay, so that bit's relatively easy to set up. Now, this is where it works out. Hold on, just need to repair that because I screwed it earlier on. There we are. So we'll just say you start on a Monday. Now you can put in the styles that you use. You know, Golden Eye, Kylie, Push, River, Whip, whatever you want. Golden Eye is my go-to. We'll just say you're doing GDP, USD, just for argument's sake. Put your starting balance in. Well, your starting balance would be 100 quid in this case. Put in the size of the position that you're going to work on. Well, we've already established that it's 10p, which is here. Smallest position. That's what you're going to run through all the time. So this side will track your progress and it'll do it itself by doing this. So you would put in when you trade. So in here, this goes right through. And we'll say you did it at 10 o'clock and you graded it out and it was a C grade and you went for it. There you go. So you won. Now on the other side, just run this through. Keep a list of what you're up to. So you might have, I don't know, say you did 60p. Just like so. Okay. Now immediately what it's telling you is you've achieved target on the day. So that would tell you to stop. You can write some notes on this side if you want, just under there. Do keep a jog. On this sheet, just keep a diary. Get A4 diary, you know, and write down exactly what you're doing. Because this is trying to show you when you complete it. So you completed your trade, say, within the same hour, 11 o'clock. All right. So it's done. So what it's telling you now is you won 6 pips, was a single trade idea, and it made 0.6 gain, whatever. Right, well, the next day, you would come in, and it's Tuesday, you're doing the same thing again, but now it's 160. You're going to stick with the same position size, which is there. It's reset, and it's reset the target again, and away you go. Now, this time, you might have opened a trade here, okay, and it might have took you all the way through to 4 o'clock, and you hit your day target there. So what it starts doing, and you can do this as well, is go, well, that's when it opened. All right, so you can say, well, I was in trade, all the way through to there, and then when it finally won is that. So what that'll show you, you can now start seeing how long you were in the trade for before it won. Okay. Now, you can also say, well, this is my starting day. I do 7 till 5. Well, you can look at each hour as well and say, well, I didn't take a trade. I didn't take a trade. So no trades, into trade, and then I had to hold that trade right through. Now, what this does for you, and I know it seems a bit long-winded, is you'll start seeing the clusters of where you opened the trades, how long you were in the trades, and then when the trades finally played out. And eventually what happens is you will see a pattern, case in point. If I look at mine, which is this is the one that I did for 30 odd days. There's all my trades. See how they all clustered in and around between 9 and 1 o'clock. You can see the density, and then you can start looking at it clearly, and you'll figure out that really all my winning days are between mainly 11 and 3. So that's the window that maybe I should be concentrating on. That's what this sheet's for, and it helps you track it. Now, information like that is invaluable. The problem with trading is people look at it too much as, I can just watch a 15-minute video, have this wonderful system that I just open it up. Yeah, there's the system. That's how I get in. And I'm going to be a gazillionaire. Well, you're not. You're a fucking idiot. What you need to do is actually apply it like a job. And any job needs a lot of planning, and you need a lot of data to understand what's going on. Now, that is how you run a business. You know, you figure out what the bad bit is, and you try and reduce that. You figure out where the good bit is, and you try and accelerate that. These sheets, and if you plan it out fully, will show it to you in black and white without thinking, well, last week I had a good trade. This will tell you exactly if it was a good trade. Knowledge is power. So there you go, Marina. That's what I would do. And for anybody else watching this, trading is a professional career, and you must treat it with utmost respect. And if you don't, this job ain't for you. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.